A very pleasant afternoon to one and all present here. I'm Sangeeta, pursuing final year Bachelor's of Commerce, Guru Sri Shanti Vijay Jain College for Women, in association with IQAC, takes immense pleasure in organizing the national level 7 days faculty development program hosted by the Department of Commerce and Accounting and Finance, Shift 1. Last but not least, on behalf of our college, I am happy to welcoming you all to the last day of National Level 7 Days Faculty Development Program on the theme Innovation Teaching Learning Process. I am not a teacher but an awakener. It's my immense pleasure to welcome all the faculty members from GSS and various other colleges for the last day of informative oriented session titled Accounting Standard Practices. We would like to extend a special guest of honor, Dr. Nancy Gulati Ma'am, Assistant Professor in Commerce, Babu Anand Ram, Janata College, Haryana. As light removes darkness, so prayer removes ignorance. Let us commence this informative and beneficial session by seeking the Almighty's blessings. Better than a thousand days of diligent study is one day with a great teacher. True to this, may I request Dr. Visalachi Ma'am, Assistant Professor, Department of Commerce, to render a gracious welcome to our chief guest and to all the spectators. Over to you, ma'am.
Thank you, Sangeeta. Good afternoon and warm welcome to one and all present here. I am Dr. Visalakshi, Assistant Professor, Department of Commerce, Guru Sri Shanti Vijay Jain College for Women, Chennai. It is my immense pleasure to welcome our esteemed chief guest, Dr. Nancy Guleti, Assistant Professor, Honorable Secretary Sir, respected Principal Madam, and my fellow faculty members for this wonderful faculty development program. It is always inspirable to know a successful person's credentials. It is my pleasure to introduce our chief guest for 7 days national level faculty development program on the main theme innovation on teaching and learning process. We are extremely honored to have a renowned educationist and an eminent personality, Dr. Nancy Guleti, Assistant Professor, Department of Commerce, Babu Anandram Janda College, call Haryana, as our chief guest for today's session on the topic accounting standards and practices. Madam has authored numerous articles published in reputed journals, including Envision, IUP, and Journals of Services Research, and presented various research papers in national and international level conferences. She has attended many workshops, seminars, webinars, and faculty development programs organized by various colleges and institutions at national and international levels. She has contributed in updating an academic curriculum and has worked as research head of the department. It is our proud privilege to have Dr. Nancy Guleti, Assistant Professor, Department of Commerce, Babu Anandram Janda College, called Haryana, in our midst today. Thank you very much, Madam, for accepting our invitation and gracing this occasion. Once again, welcome you all for this amazing session. Thank you, one and all.
Our college deemed this as a to felicitate a guest of honor.
Thank you, ma'am. Uh, for your valuable time has been spared with us. And as a token of love, we are sharing this e-memento of appreciation for your kind acceptance.
The words of the knowledgeable person are
Thank you, ma'am.
valuable. Thank you. The words of the knowledgeable person are valuable. Life is like accounting, everything must be balanced. And now it's time for us to acquire knowledge on accounting standard practices from our chief guest. May I take the pleasure of requesting our guest of honor, Dr. Nancy Gulati ma'am, Assistant Professor in Commerce, Babu Anand Ram, Janta College, Haryana, to take over the session. Over to you, ma'am.
Thank you for your kind words, ma'am. Foremost, I would like to congratulate GCC Janta College, GCC Jan College for Women for organizing this successful event till date. And obviously, it gives me an immense pleasure to be a part of national level 7 days FTP on the topic innovation on teaching learning process. Today, I'm gonna cover overview of Indian accounting standards and its applicability issues. I'll also cover ITFG issues during this transition. And I'll also try my level best to give you all the guidance in a very simplified manner. So to begin with, as the host has said, I'm Dr. Nancy Gulati, Assistant Professor in Commerce, Babu Anantram Janta College, Call, Kethal, affiliated to Kurukshetra University. So these are my details, like in case of further contract. As I've discussed, I'll be sharing India's details today. This is the content that I'm going to cover today, including the needs of accounting standards, introduction, like what are the authorities that have been involved in development of Indian accounting standards, applicability issues for the Indian accounting standards, what is the structure, overview, and ITFG issues. So let's start. As the name suggests, accounting standards, the first thing that comes to one's mind is what is standard? What is actually standard? Let's forget the term accounting for this time period only. We are only talking about standards first. Okay, I need to get a register. Notebook. I need to get a notebook, and like someone from my home, let's take an example. My husband goes to the market and I ask him to buy a long register for me. And he asks me, how long? I don't have any standard to measure height. What I do is I take the help of my handspan. So what I do is I just measure it, and I said 2 handspan long register I need. Now, there is a difference in the handspan of my husband and mine. And he got the register which is 2 handspan, which is having a length of 2 handspan of his own. So obviously, the output that I wanted was not there. The register I wanted was not there. So there arise a chaos. That's the reason. And if I ask him to measure it, before telling him the length, I took the help of a scale and measured the accurate length. And in that case, what would have been? He would have bought the same length that I have wanted. So that is why we need standards. So standard is always the necessary to bring uniformity. But when it comes to accounting, why do we need accounting standards? Obviously, the common need for having standard is uniformity, and that is the same in case of accounting standards too. Uniformity, how accounting standards bring uniformity? Uniformity is bring in the sense, see, I'm maintaining my accounts with some other tools. I'm recording some item in a register, maybe first page there, second page here, in a third page in another notebook. Would it be feasible if somebody asks me, okay, what are your profits for the year? What are your profits for the quarter? Will I be able to find it out? No, I need to shuffle my register one after another, and I'll not be able to get the information. And if I need to, secondly, if I need to compare it with some that of other organization, will we be able to? Because obviously not, we'll not be able to, just because we don't have the uniform standards in preparing accounting. So here comes the need of accounting standards to bring out the uniformity, so as everybody does the same thing in the same manner, to make it reliable, to make it comparable, and accounting information obviously becomes necessary in that case. So next to this is Introduction to accounting standards. As we all know, what are standards? As we have discussed earlier too. Friends, accounting standard is a set of principles, standards, and procedures that define the basis of financial accounting policies and practices. Means these are the policies and accounting policies. It tells us the ways, the methods of preparing accounts, and if everybody follows it, the standards become genuine and information become reliable, uniform, and comparative. So what are the accounting standards? These are the written statements consisting of rules. It has some guidelines that have been issued by accounting institutions. Now here comes the point. Who maintains, who issues, who notifies the accounting standards? That have been done by, there are certain authorities, there are certain accounting institutions that are involved in framing of accounting standards, so that they perform it, so that they make it like that the information that is being represented in accounting become uniform and consistent. So what are the next topic is, as we have discussed, that there are certain institutions, there are certain authorities that are involved in development of Indian accounting standards. Now it comes to our mind, what are the authorities? So let's start. So the first and the foremost, and I would say the top authority, the highest most authority that have been indulged in preparation of accountings in the development of Indian accounting standards is MCA. MCA stands for Ministry of Corporate Affairs. Ministry of Corporate Affairs is the topmost authority, and it is the authority that feels, whenever the authority feels or realize the need of having accounting standard in any area, what it does is it asks the same to ICAI. And what is ICAI? This is Institute of Chartered Accountant of India. So now, what does ICAI does? ICAI is the organization that is involved in framing of the standards. Keep this thing in my friends in your mind, that MCA realizes the needs but is not involved in framing of our standards. And who is involved in framing of our accounting standards? That is ICAI. Now, just take a very small example at our college level. What happens? There comes a task. Let ICAI be a college in this example. There comes a task for our college. What happens? There becomes a board that is being passed to the management, or thereafter a committee is framed for every task, and that committee, that committee does the task assigned to them. In the same way, ICAI has many things to do. It is a big organization and is heavily or actively involved in many activities. Now the point comes, what ICAI does is they have an accounting standard board. And what is the board? What is this board? As the name reveals, this is Accounting Standard Board. This board is actively engaged in maintaining or framing or development of accounting standards. And under this board, there used to be a committee known as NACAS. What is NACAS? National Advisory Committee on Accounting Standards. But as I said, there used to be this committee. At present, this committee does not exist. At present, the committee is NFRA. It is National Financial Reporting Authority. Now, what happens is ICAI or Accounting Standard Boards further hands over the task of development of accounting standards to NFRAs. Now, NFRAs, as per the needs or the guidelines that have been issued by ICAI, and further they prepare a standard, they frame it, and what happens next? ICAI gives back that standard to MCA. Now, it is the discretion of MCA either to accept that standard or not. If MCA feels it right, they notify it. Otherwise, they may remove it. It's not necessary for MCA to notify the standard that have been given by ICAI to MCA. Now, let's come back to accounting standards or principles as we were talking about. GAAP. I think we are using this term since we have started studying commerce. What is GAAP? This is generally accepted accounting principles. So as it said, these are the generally accepted principles. Fine. So when it comes to generally accepted accounting principles, these are of two kinds. The one is at national level and the other is at international level. So what is at national level? National level is at the domestic level of a company, and that is recommended by that specific country only. Means the national gap of a country cannot be used by some other country. If it is recommended, notified by one country, only that country is going to use it, no other country. But when it comes to international gap, international, when a thing becomes international, when it is being framed by two or more countries collectively, right? So in the same manner, international gaps are those gaps that are recommended and followed by a few countries collectively. Now, the example for national gap is accounting standards used in India, AS, fine, and US gap is also the standards that are used in US only. And for international gap, these are IAS, International Accounting Standards, and these are followed by UK and other several European countries. So, as we discussed, gap are of two kinds, national and international gap. So, due to this national and international gap, there are arising, like we came across certain terms, AS, see, IND AS, IND, IND AS, IAS, IFRS. So these are the terms. Now, I just want to tell you there is an error. Keep this S capital. Consider this S, Ind AS wala S, can consider this S as capital. So, national gap. Before I tell you all these things, I would like to tell you there are certain confusion among the persons. Many of the, in fact, a few or many of the people consider IAS as Indian accounting standard, IFRS as international financial reporting system. So they consider as IAS as Indian and IFRS as international. So my friends, in case you have any perception like this, I must say you are wrong. IAS stands for International Accounting Standards and IFRS stands for International Financial Reporting System. There is one more chaos among the people. Some people think that IAS and IND AS, it's one and the same thing. In some cases, we may write IND, or in some cases, we may ignore ND of the I. So it's again, in that case, if you have any perception like this, you are wrong. IAS stands for International Accounting Standards as a part of international gap, whereas IND AS stands for Indian Accounting Standards, that is a part of national gap of India. Fine. So let's, hopefully the doubts are clear. Now let me explain all these terms to you and how these terms are used nowadays. See, national gap in national gap, I have written here as two terms, that is AS. AS stands for accounting standards. And the second is IND. This is IND for India. It reflects India. So we read it as IND and AS, IND AS. So the first term under national gap is AS and the second term under national gap is IND AS. So now what's the difference between these two terms? Earlier we used to have AS, accounting standards. As we all know, change is the law of nature. With the passage of time, there are some changes, and now that we are transiting towards IND AS. Clear? Next, international gap. In the same manner, when we used to have AS nationally, internationally there was IAS which was prevailing, and now we have IFRS. I hope it is clear to all of you. The next is IFRS compliance. Now, what is this IFRS compliance? Why do we need to comply IFRS? We obviously, if we are studying IFRS compliance, there arises a question in our mind that why do we study this compliance? So we'll discuss it as well. So IFRS compliance can be of two kinds. The first can be IFRS adoption and the second can be IFRS convergence. What is adoption? How do we adopt anyone? Adopting is like the something, accepting it as it is. Means if some other countries, some European countries, as I discussed, some UK or some other European countries are following international GAAP. And if we adopt their system, their accounting system as it is in our country, it becomes IFRS adoption. Clear? But in case we need to modify it as per our business environment, our trading requirements, keeping in line the international standards, that is known as IFRS convergence. I hope it is clear to you. I repeat, adoption is accepting it as it is. Conversion is making some changes into the IFRS and preparing it the way we want it to be, but that changes should be in line with IFRS. It should not be against or opposite to the rules that have been mentioned in IFRS. Clear? So it is written here, IFRS adoption means the country is adopting IFRS prepared by IASB, International Accounting Standard Boards. As I discussed earlier, ASB stands for Accounting Standard Board, which is for India. But when it is written IASB, it is International Accounting Standard Board. And the second is IFRS convergence. And what is IFRS convergence? That is preparing own standards but in line with IFRS. So here comes a question in the mind. Is India adopting IFRS or complying IFRS? Are we adopting international standards by IASB as it is, or we are changing it as per our own requirements, that too in line with IFRS? What are we doing? As we have discussed earlier, we are using Ind AS. Means we have prepared it for our own country. If we have prepared it for our own country, what does it mean? We are going for IFRS convergence. We are not adopting IFRS. So clear? So now the point arises. What is the need to have convergence? Why do we need to converge accounting standards? What? Fine. So here comes a need for uniformity. That will attract, uniformity in standards will attract international investors. How uniformity will attract international investors? Let's take an example. There is a country in Germany and they want to invest in India. Why do they want to invest in India, and why would we let them invest in India? So answer to this is why the government is promoting FDI. Obviously, foreign investors brings capital in our country, that leads to capital formation and ultimately boost in our economy. But what happens is there is entirely different accounting system in our country. In that case, there would be complexity faced by that country. Obviously, foreign investor will not feel to invest in our country in that case. So that is the reason that we need to converge it in line with IFRS, so as to bring uniformity in standards, so as to attract international investors. Now, one more thing, when there was AS, why need to have Ind AS? Why there is a need to change it? Why there is a transition from AS to Ind AS? So there was certain disclosures that were limited in AS, but as IFRS is wider as everything, fine. So in the same way, Ind AS is also wider. There are certain changes as well, and Ind AS is also wider and is disclosing almost everything. That's the way, that's the reason of transition. Now, when we are transiting, what are the ways of transition? Why we have gone through transition? We have discussed that why we have gone through transitions. But now the point is, what is the change? The change here is companies Indian Accounting Standard Rules 2015. Actually, what happened is in 2011, it was decided to apply accounting standards in IFRS. Now, what happened is the companies faced a lot of difficulties. What kind of difficulties? Obviously, if you need to change your system, just think about it. In case you need to change your own system for any special thing, would it be easy for you? No. And in case if a company is following a particular method of accounting since long, is it easy for a company? There were a lot of issues, there were a lot of complexities, hence the its adoption was deferred till further notice, and there was nothing was done meanwhile. After 2011, there come a notice in 2015. What happened? In that 2015, MCA notified companies Indian Accounting Standard Rules 2015 on Feb 16, 2015, and they introduced 39 Ind AS. Thereafter, if something is issued once, will it last longer? No. As I discussed, change is the law of nature. There might have been many there might have been many complexities in adopting it, or there may be a broad vision of the government, and this was just an introduction in 2015 with that of a broader vision to include more of the companies under the frame of Ind AS, so that the most of the companies start preparing their accounts as per Ind AS schemes. So again, an amendment came. Subsequently, MCA notified companies Indian Accounting Standard Rules 2016, and thereafter 2017. So as of now, as I mentioned, it started with 39, one was removed, there was two was reissued, and as of now we have 41 Indian accounting standards that are applicable to certain class of company. Now, here are two terms that I used: applicability and the class of company. So when we talk about applicability, my friends, we talk about the dates when it is applicable. And when we talk about the class of company, means to which company these standards are applicable and to which not. So here's the applicability of Ind AS. Now, first of all, I'll be talking about the dates of applicability. What are the dates of applicability? It defines the date. It defines the time frame from which Ind AS is applicable, and the manner of its application. Manner of application means the date of application of Ind AS can be voluntary or mandatory, but it's not now. Initially in 2015, when initially in 2015 when Ind AS was introduced, it was voluntarily to adopt. Means any of the company, as the name indicates, it is at the wish of the company. Either they want to maintain their accounts as per the old accounting system or the new Ind AS, or as per the old accounting standards or the new Ind AS. So it was truly at the wish of the companies. But in the next phase, that is known as mandatory adoption, as I told you, in 2016, there was that is known as phase 1. Phase 1 was introduced in 1st April 2016. Phase 2, a further amendment, 1st April 2017. Now, as we got to know, there were some rules in 2015, there were some rules in 2016, there were some rules in 2017. Now the point comes, what are those rules? So let's start with voluntary adoption. That was applied from 1st April 2015. So if it is being introduced on 1st April 2015, it is applicable from the financial year 15-16 as well. So under Ind AS, the most important thing to be considered is, remember this fundamental law of application of Ind AS that I'm going to tell you now, is once a company opts in Ind AS, it cannot opt out. Means whatever the rules we'll be studying, even in the mandatory adoption, but this is the fundamental rule for application of Ind AS. And what is the fundamental rule? The fundamental rule says once a company has started preparing its account considering Ind AS, it cannot opt out, it cannot reverse, and it cannot reverse its decisions and get back to application of accounting standards. No. Clear? One more thing that we need to consider is, whenever a company adopts Ind AS, it needs to prepare a comparative financial statement. What is the comparative financial statement? Okay, comparative, as we all know, comparative statement is comparing it with that of some other year. So if we are making it applicable in the financial year 15-16, so how can we compare it with that of 16-17? Obviously, at that point of time, we cannot do it because we don't have any data for 16-17. So how will we be comparing it? We'll be comparing it with the data that we have in 14-15 with that of the last year. So comparative financial statements are prepared. So in whatever year the company starts adopting the Ind AS, it has to make a comparative financial statement for that of the previous year. And now a question arises again. In the previous year, we were not adopting Ind AS. Now that in 15-16 we are adopting Ind AS, in 14-15 we were not adopting Ind AS. So figures in 14-15 and 15-16 will not be same because the calculation method may vary. Let's take an example. Value of a particular asset comes out to be 100 in the 14-15 as if we were calculating it as per the previous accounting standard. But now that if we calculate it using the new accounting standard, the value turns out to be 120. Obviously, there is a difference. Now the point is, when we are preparing comparative financial statement, which value to use? 100 or 120? We'll be using 120. We'll be using the revised value as per the Ind AS. So for the previous year, all the figures will have to be adjusted as per Ind AS. Now, there comes one more question in mind. What would happen to 20 rupees in that case? What would happen to the difference value that would be put to the retained earnings? Fine. Now, one more thing I would like to tell you is whenever we'll be preparing comparative financial statements, as I told you that we need to do it for the 2 years. The one would be for the current year and the second would be for the last year. So for the current year, it would be 15-16, 31st March 2016. And for the last year, 2015, what would be the year ending? It would be 31st March 2015. Now for that, we need to consider one more thing. We need to have all those values on the opening date of the previous year as well. So what is the opening date of the previous year? That is 1st April 2014, and that too will be adjusted as per Ind AS. So when we'll be preparing comparative financial statement, what we'll be doing is we'll be having three values. The one is for the current year. The second is for the year previous year ending on 31st March and previous year starting on the 1st April. Clear? And for this case, I am taking the dates again so that you can make it clear in your mind again. So for the current year, the value would be 31st March 2016. For the last year, the value would be 31st March 2015, 1st April 2014. Clear? So the second part is mandatory adoption. As we discussed, application when the first was voluntary adoption, the second is mandatory adoption, and mandatory adoption was introduced in 2016-17 financial year. So it is applicable from 2016 to 17, 1st April 2016 to 31st March 2017. Now the point is, it is mandatory, as the name indicates. It is not dependent upon the wish of any company. It is mandatory for the company to follow it. So all the companies, whether listed or unlisted, having net worth of 500 crores INR or more, means all the companies, even if the company is listed or unlisted, any of the company, it is applicable to both the companies, either listed or unlisted, means any of the company which is having net worth of rupees 500 crore or more than that is required to prepare its accounts as per Ind AS. It is mandatory for the company. Now the question arises, how do we calculate net worth? What is the formula for calculating net worth as per the Ind AS? So formula for calculating net worth as per Ind AS is share capital. Share capital includes both equity share capital plus preference share capital plus reserves and surpluses minus all the deferred revenue expenditures. That comes the net worth. So in this way, a company will be calculating its net worth. And if the net worth of a company is more than 500 crores, and in fact, if it is equal to 500 crores, the company is mandatorily required to maintain its accounts as per Ind AS rules. The next is comparative financial statements need to be prepared. Again, same thing as we discussed in voluntary adoption, that comparative financial statements will be prepared in the same manner. There would be three values. The one as the mandatory adoption is starting from 16-17. So in that case, the one will be the first date will be 31st March 2017. The second date will be of the previous year, which is 15-16. And what would be the second date? It would be 31st March 2016. And what would be 1st April 2015. So again, as we discussed earlier, for the previous year, Ind AS has to be applied for the comparison. Clear? Next, mandatory adoption 17-18. Mandatory adoption 17-18 means the next amendment. After 16-17, again, there was certain changes that have been declared by, notified by MCA. Now, what are those changes? The changes was, the first is obviously applicability issues are, applicability is starting from 17-18. Now the issues are all listed companies or any of the company which is in the process of being listed, means even if the company is not listed, it has applied for listing. So if listed or in the process of listing, both the companies, in case any of this company is having net worth even below 500 crores, are required to maintain their accounts as per Ind AS. Now, what does it mean? It means, if we sum it up in a layman language, it says all the listed companies are required to maintain their accounts as per Ind AS. Fine. Now, I talk about only listed companies. That all the listed companies are required to maintain their accounts as per Ind AS. Now, what about the Ind AS? What about the unlisted companies? Unlisted companies, for unlisted companies, MCI gives a net worth criteria of rupees 250 crores. So all unlisted companies having net worth more than 250 crores or equal to 250 crores are required to maintain their accounts as per Ind AS. In case it is less than 250 crores, they are not required to maintain their accounts as per Ind AS. And in case its net worth is 250 crores or more than that, they are required to maintain their accounts as per Ind AS. I repeat, all listed companies are required. From 17-18 companies are required to maintain their accounts as per Ind AS. And as far as unlisted companies are concerned, they are required to maintain their accounts as per Ind AS when their net worth turns out to be equal to or more than 250 crores. Clear? Again, financial statements, comparative financial statements need to be prepared as usual, as we done it in the previous two phases. The same is in that case, and in this year too, previous year figures need to be revised. Previous year needs to be revised as per the rules of Ind AS. And again, there would be three values that will be representing in our financial statement. The first value would be of the current year. The second value will be of the previous year, last date of the previous year. And the third value will be the opening date of the previous year. So, option 2018-19. So, when a company's net worth becomes greater than 250 crores, see now here in the phase, in the phase was listed over there, posted, it was applicable, and for unlisted it was 250 crores. But now 2018-19 onwards, what happened is, when a any company means either listed or not listed, if any company's net worth becomes greater than 250 crores in any particular financial year, they are required to prepare their accounts as per Ind AS. Again, whenever a company is transiting its accounts from AS to Ind AS, they are required to prepare the comparative financial statement. And how to financial statement? That would be prepared for the, again, same. That would be prepared in the same manner for the current year, for that of the previous year, and the opening date of the previous year, and the values that we are putting for previous or apply Ind AS has to be applied to arrive at the comparative figures. Clear? Now, the point here is, once company start preparing its accounts as per Ind AS rules. Now, what happens? Please any of the subsidiary subsidiary company, associate company, or joint. If the all these four, any company starts preparing its accounts as per India's rules, any of its holding company, subsidiary company, associate as in their accounts irrespective of their net worth. Means very simple, if holding company is applying Ind AS and its net worth is greater than 250 crores and holding company has started applying Ind AS, in that case it is mandatory for subsidiary company and its joint venture to apply Ind AS. On the other hand, what happens if a subsidiary company's turnover and holding companies doesn't have such net worth? So will holding company be mandatorily applying Ind AS? Answer to this is yes. So these four are the group associated with each other. If anyone amongst these applies Ind AS in any of the financial year, the other has to apply it. It is mandatory for others even if the net worth is not the criteria. And once again, I said, once a company opts in for Ind AS, it can mean if in any of the subsequent years the net worth of a particular company falls below criteria, it doesn't mean that the company will stop adopting IAS. Company will stop maintaining its account as per Ind AS. No, it will not happen. Once a company has started account, it will have to in a continuous manner. Difference is of the dates of applicability. Phase 1 for NBFC starts from 1819 and phase 2 for NBFC starts from 1920. Applicability of banks and insurance companies is still deferred. Why? Once it was given a chance to adopt them, but what happens? There was a lot of complexities faced by the banks and insurance companies in following it. So it is still deferred till further notice. Now, list of Ind AS. As we discussed, there are 41 accounting standards as of now. So this is the complete list of Ind AS. Now, as we all know, there is not a bigger change. There is not a big change in Am I audible, ma'am?
Yes, ma'am. Yes, ma'am.
And
Please continue.
okay. I'm sorry for the inconvenience, and I don't know till how long I have covered. Is it
No
visible?
problem,
Is
ma'am.
my screen visible?
Yes, ma'am. Yes, ma'am.
And I believe I am reaching the time limits. I don't have enough time, and I have much of content, but still I'll be summing up within 5 minutes. I'm sorry for delay. This is the list of Ind AS, and in my plan it was to discuss, to give you all a brief overview of Ind AS. But as we are lacking time, so I'll just like to tell you, rather than taking all these Ind AS one by one, I will just tell you some brief points that we need to consider before starting Ind AS, before starting studying Ind AS. These are the brief points that we need to consider before starting studying Ind AS. I'm sorry again, due to the network issues. See, I'll not be taking much of time as I am already out of time. So I'll be just explaining you what the ITFG issues are and how we can solve them. I'm sorry, my friends. Now that I would like to take a end note of my slide, these are the things that you may consider. ITFG issues you can refer yourself. That's over from my side. These are the websites that you may refer for any doubts, mca.gov.in or icai.org. And before I complete, I would like to give a warm thanks to Dr. M.K. Malati, Dr. Gautam P. Ved, Honorable Secretary, Dr. M.K. Malati, Principal of the College, Dr. Gayatri, HOD, Dr. Lakshmi, Head of Accounting and Finance, Dr. Uma Rani, who has been coordinating for this FDP, and all other students coordinators. And thank you so much for giving me the opportunity to present myself on the topic Indian Accounting Standards. And apologies for the internet connection that have been happening from my side. I don't know why it happened today. So thank you.
No problem, ma'am. Thank you, ma'am. Thank you, ma'am. Thank you for your excellent speech.
Thank you, ma'am, for your informative session. It's time for interaction. Now I request the spectator to type your queries in the YouTube live chat. Thank you, ma'am. Saying thank you is more than good manner. It is good spirituality. May I call upon Dr. Lakshmi ma'am, Head Department of Accounting and Finance and IQAC Coordinator, Shift 1 to propose the vote of thanks.
There are no doubts.
Good afternoon to one and all present here. I would like to thank each one of you for joining this national level 7 days faculty development program on the topic Innovation in Teaching and Learning Process, organized by Guru Sri Shanti Vijay Jain College for Women, hosted by the Department of Commerce and Accounting and Finance in association with Internal Quality Assurance Cell. I thank the experts for giving an excellent presentation of the wide range of very interesting topics, and I thank all the renowned speakers who took out their valuable time in joining with us for this 7 days faculty development program. It's my pleasure to extend a hearty and sincere thanks to our Honorary Secretary Sir Dr. Gautam P. Vaid and our beloved Principal Madam Dr. M.K. Malati has given me an opportunity to conduct this national level 7 days FDP program. It's my pleasure to thank Dr. B. Revati, Professor, Head, Department of Commerce, Manonmaniam Sundaranar University, Tirunelveli, who gave us excellent presentation on the topic Stepping Stone for Women Empowerment. I also thank Dr. Nitin Thapar, Associate Professor, School of Management and Commerce, RIMT University, Punjab, on the topic Financial Derivatives, Option Trading and Strategies. My sincere thanks to Dr. Bloomin Reggie, Assistant Professor of Commerce, St. Mary's College, Thuthukudi, on the topic Invisible Banking 2020-30. I extend my heartfelt thanks to Dr. Prabhujit Gaur, Assistant Professor, Jagannath International School Management, New Delhi, on the topic Green HRM. I am very much thankful to Dr. S. Karthik, Associate Professor of Commerce, Kalasalingam Academy of Research and Education, Virudhunagar, has given an excellent lecture on the topic A Broad View of GST. I take this opportunity to thank Mr. Rahul Banubai Chauhan, Assistant Professor, Parul Institute of Business Administration, Parul University, on the topic Behavioral Finance in Portfolio Management. The final session was enriched by Dr. Nancy Gulati, the Assistant Professor in Commerce, Babu Anand Ramjan College, Haryana, on the topic Accounting Standard Practice. I am also extend my thankfulness to my colleagues who have rendered a greater support in organizing this national level 7 days FDP. I am thankful to all the distinguished professors from various streams for this national level 7 days FDP program in supporting us to make this program a successful one. Thank you all.